Hi, Ruma.
Hey Fiona.
Hi, so I was just wondering what's the difference from a basic home loan and a pro pack?
Difference between a basic home loan and a pro pack. Okay.
Yep.
All right. Did you know that fundamentally there are only three types of products? Did you know that? Like in the whole industry, there are only three types. When you see so many ads, this and that, it's
Yep.
all they're only just a minor change in the product, and they basically give it a different name and they call it a different product.
Okay.
But the fundamental structure is only three types, and I'm going to explain it to you. The difference between under the variable, so they're fixed and variable, right?
Yep.
So I'm going to explain it to you that what is the main three structures, three types of structures, whether you put it on basic variable, variable or fixed. Okay, so just listen carefully and
Yep.
please ask me if you have any questions. So number one is your basic. Yeah. Number two is your pro pack. Yeah.
Yep.
And number three is your line of credit. There used to be in good old days, there used to be intro rates also, but they're gone. Like there are only one or two banks, I think they're offering intro rates.
Okay.
But you know, when Julia Gillard, she abolished the exit fee and all that, so banks stopped offering intro rates. So I'm not going to talk too much about intro rate, but I can give you a quick sort of introduction to them later.
Okay.
So let's say now we're talking about variables. So remember, in the variable products, what's the basic feature? What's the very common feature in the variables? Do you remember that? You can make extra repayments and you can redraw.
Redraw.
You can redraw it. So you can make any number of extra. I always say, I give this analogy. I don't know if it's right or not. But variable is like a water bucket. You can pour water, you can take it like it's a liquid.
Yeah.
You know, it kind of moves as per the interest rate and as per the market, and you can change it, you can pay it off anytime. There's no penalty. Fixed is like a rock, like it's like a solid substance that you can't move it, you can't make extra repayments, you can't you can't redraw from it, etc., etc. So I'm going to talk about variable now. So the common feature amongst all these types is that you can make extra repayments and you can redraw. So remember that. That's first thing. Okay, now the difference between basic and pro pack. So basic, as the name sounds, basic is just a loan, one simple loan account. So the bank's going to give you just one loan account. You can make extra repayments, you can redraw from there. Now what, as the experts in the industry, we have to see what sort of fee they are charging and what sort of rate they are offering on that. So rate and fee, that's how you distinguish between one basic to another.
Okay.
But normally there's no ongoing fee, there's no credit card facility, there's no saving account linked to the loan account. So that's basic. Now comes the pro pack. So with the pro pack, like it says, professional packages, as the name sounds, professional package. So you get everything with this product. Everything meaning you get a saving account. What is this saving account called? Do you know? Do you remember? When it's linked to the loan?
Offset?
Perfect. It's called 100% offset. Why? Because it's offsetting your amount sitting here. So if your amount is 100, you've got 20 here, it's going to offset the interest on that, which means you're paying interest on $80. So you get the offset account, you get ATM card, because you've got this is your day-to-day transactional account, right? So you get an ATM card to withdraw the cash and all that. So that, hence it's a pro pack, meaning all in one. It's also called all in one. Okay. So ATM, then you get a credit card with that. Okay. So credit card meaning that bank says it was actually kind of a marketing ploy from the bank to sell their cross-sell their products. So they say that, why are you getting credit card from somewhere else? Why are you keeping your savings somewhere else? Why don't you put everything with